video, I'm going to quickly discuss with you how you can use risk to reward ratio to sustain profitability in the forex market. In fact, um, without missing word, risk to reward ratio is the game changer to forex traders that are profitable in the forex market. Or let me say it this way: risk to reward ratio is the game changer of profitable forex traders. If you follow anybody that you know is consistently profitable, go and check. These are people that has a trading system that ensure that they can really catch a very reasonable risk to reward ratio when their trade goes in the direction they are projected. And of course, when the trade goes against them, they are just going to be losing a fraction of what they have made over time. So in this video, I'm going to be using PMI investment trading model to explain how you can use risk to reward ratio to sustain profitability in the forex market. And I'm going to be using a live example of a trade that we picked. We picked the trade, I think it was last week, Friday, and the trade had already delivered ratio 1 to 6. Ratio 1 to 6. I want to use that as an example, and I want you to follow me very closely. In case you are going to be viewing this video on your phone, you might need to change the quality of your picture to higher picture quality, or say maybe 1080p. You can just go to the top right corner of your phone on YouTube and change the quality of the picture to 1080p, so that you'll be able to really view the chart, and follow me as I explain how we pick the trade. This is very important, and if you really want to trade in the forex market and you want to be profitable, you intend to be profitable in the forex market, you really need to take note of um, of this risk to reward ratio. Is the game changer. I'm not going to lie to you, and of course, you need to start to harness it, as quick as possible. So let's go to the chart. Okay, let's see how to use. Let me just walk you through what we do at Potential Miners International. The title of the video is how to use risk to reward ratio to sustain profitability in the forex market. So in case you are new to forex trading and you are seeing this video, risk to reward is the ratio of what you are ready to lose if the trade is a losing trade, as against to what you are projecting to win if the trade is a winning trade. For instance, at Potential Miners International, we have three different models, and in these models, we have trading frameworks. So I'm not going to probably bore you with going through the different models. I'll probably do a separate video where I'm going to explain each of the trading models and how we project our risk to reward ratio. But for the purpose of this video, I'm just going to talk about the PMI investment trading model. Now, this trading model, we have two framework. We trade the daily impulse wave, and the second one, we trade the weekly impulse wave. Please, I want you to follow me very closely so that you will understand uh, our systematic way of approaching the market and using identified, tested, and proven trading system to make money consistently in the forex market. And the essence for this video is on the basis of the fact that Potential Miners International were how to change the narrative of the forex market, of the forex industry, in the mind of an average struggling trader or intending trader. A lot of people believe that forex market is for people that are probably jobless or people that don't really have much to do, or young people that really want to gamble their way into success. And that's not the truth. Forex market is a market that you can approach and trade at a professional level. I understand that the narrative out there is that you just come, you gamble your money. A lot of people, they have burnt their fingers, they have lost a lot of money, they have lost fortune trying to make money in the forex market. And this is because a lot of the time people just come into the market with the expectation to just flip their money and make some billions overnight. And so at Potential Miners International, the drive behind what we do and the reason for pushing some of this educative video, online is so that as many people that can come across this video, you can really relax yourself and begin to follow through on how to approach the market from a professional standpoint. I cannot overemphasize this. This is very important. In fact, for us at Potential Miners International, this is a very long journey for us. This is what we are going to do and probably transfer the skill set to our children and children's children. It's very important. And this is because we took our time, like about 6 years, to research into the market, and we have been able to come up with a trading system that is reliable, and that is why we are certain that you can approach the forex market and trade at a professional level and make consistent money for yourself. So without further ado, let me just go straight to what we talk about when we are saying our investment model. So for this investment model, our risk to reward is 1 to 6. Risk to reward is 1 to 6. What that means is if you are risking 1% of your capital, risk capital analysis. If you are risking 1% of your capital, let's say your capital is let me say your capital is $100, for instance. So if you are risking 1% of your capital, it means you are risking $1. And this trading system, this PMI investment trading model says that whether you are trading the daily impulsive wave or the weekly impulsive wave, you are expected to take ratio 1 to 6. The risk reward is, okay, 1% of $100 is $1. Okay, $100, $100, okay, it's equals to $1. Now, if you risk $1, given the fact that you decide to trade 1% of your account, if you risk $1, 1%, which is $1 of $100, then and the trade ended up a profitable trade, which means that you fall on the positive side of probability. You are expected to make 6% from that trade, which means you are expected to make $6. Do you see that now? But at Potential Miners International, for every trading framework or trading model, as the case may be, we have a recommended risk management framework that you are to use. So at Potential Miners International, what we recommend is that of whatever capital you have, your risk management should be 2%. 2% risk management. This is the recommended risk management. Given the fact that at Potential Miners International we have three risk management, we have the conservative, and that is 1%. We have the recommended, and that is 2%. And we have number 3, we have the aggressive, and that is 5%. So at Potential Miners International, the most aggressive trader will only be permitted to use 5% of their trading capital. And this is because we trade in clusters. We trade in clusters. And each cluster is a 20 trade. So for you to be able to take 20 trade, the maximum percent of your capital, I mean to say capital that you can risk will be 5%. So, but for investment account or investment trading model, you are expected or it is recommended that you risk 2%, except if you want to go aggressive, which is of course is subjective. You can decide to go aggressive. So now, as a thumbnail of this video, the PMI model for investment is saying that when you risk, instead of 1%, now when you risk 2% of your account, let's say you have $100, that is $2. You are expected to make 6% of that particular account, and that is going to be $12 on one trade. On one trade. And this is what we ensure that you are able to leverage on the power or the strength of risk to reward ratio to be able to sustain profitability in your forex trading. This means that if you take one trade now and the trade ended up a profitable trade, it means that you will take 6 trade and you will lose all the 6 trade before you can lose the profit that you have made on one single trade. Do you see that now? In fact, at Potential Miners International, is almost impossible for you to trade with us and blow your account, except if you don't follow what we instruct you to trade or to do. It's impossible for you to fund your account, follow all our rules, pick a trading framework, and you trade it with our system and you blow your account. It's almost impossible, because when you have a winning trade, you have a reward that is like multiple of 3 times or multiple of 4 or 6 times of what you are risking when you lose any trade. So don't let me bore you with this theoretical explanation. Let's just go straight to the chart. I want to show you example of our investment trading framework, investment trading model, and we pick the trade using the daily impulse wave trading framework. Do you get that now? Under investment trading model, we have 2 frameworks. Number one is the daily impulse wave trading framework, and the second one is the weekly impulse wave trading framework. So we picked this trade last week, Friday, using the daily impulse wave trading framework, and today the trade had already cashed out at risk to reward of 2 to 12, because we recommended 2% risk management. So let's just go straight to the chart. So like I used to say, for us to trade at Potential Miners International, we start our analysis from the fundamental storyline to the sentiment storyline, then to the technical storyline. So the fundamental storyline is what we engage in when we want to identify what to trade. Then we move to the sentiment storyline, where we optimize what we are to trade based on the sentiment of the market. So we have overviewed the fundamental storyline and the sentiment storyline, and it is obvious that we are in a risk on sentiment or market overview. So we have picked USD JPY as our choice asset to trade. You see that now? Then we now move to the technical storyline. This is where an average forex trader wants to focus on. They don't want to talk of the fundamental of the sentiment. Of course, maybe it's because it will take quite a number of analysis for you to be able to really dissect what is happening at the fundamental and sentiment level. But however, you cannot trade in the forex market without considering what is going on in the fundamental, standpoint or environment, or what is going on the sentiment side. So, but then let's now go straight to the technical storyline. When we get to this technical storyline, what we want to ensure is to see what is our directional bias. We take a step-by-step approach to our trading. The same thing you will do when you pick trade now is the same thing you will do if you are to pick trade tomorrow, next month, provided that you are using that particular trading framework. So for this investment trading framework, we consider our directional bias, and we go to the weekly to overview our directional bias. We have a gauge that, of course, I can't overemphasize the importance of using this gauge. I've talked about it severally on this YouTube channel. I've explained it in a particular video how to use it. So this gauge, once you have it plugged in into your interface or your trading platform, you can view the directional bias at a glance in less than 5 seconds. So this gauge now, once you have it, this is the gauge I'm talking about. If you can see my chart clearly, this is the gauge. So you want to observe on the weekly, is the price above the cloud or below the cloud? Anytime the price is above the cloud on the weekly, it means that you have a bi-directional bias, and you will only be taking buy trades. There is no reason why you will take a sell trade. So we overview that. The next thing we do is we want to go to our market orientation. And we do that on the monthly to be able to view our market orientation. And from what we can see that the market as at this point is more of a markup. You see something that look like, you don't need to confuse yourself, at this level. Let me just help you. Let's say we have something like this, something like this, something like this, something like this. Let's pick it here. Let's give this one. Okay, something like this, something like this, something like this. So this low could not be broken, so we are expecting it to go up. The market came here, so we are expecting, we have a similar markup orientation. Of course, you are just to overview this on the monthly. You don't need to worry yourself, about it must be accurate like that. Once you open the monthly chart, you will see it, if you are familiar with how to view it, that we have, a predominantly markup market orientation. Then you move to the daily. This is the process that we have followed in picking this trade, and of course, I think I've done a video on this, so that in case you want to really understand market orientation, you might need to search for the video. I've done series of videos on each of these concepts. You might need to search for each of these concepts so that you can really sit on them and understand. But what we do on the monthly is we look at the market orientation. Remember, the first thing is check your directional bias. If it's a buy, you want to look at the market orientation. If you have a confirmation of, a markup which is going to really support your hypothesis of a bi-directional bias. Okay, now, so we go to the daily. On the daily, we are looking out for our market structure. This is very important. I've always said this. Anytime you get to the daily and the market structure is a buy, you will only be taking a buy. And anytime you get to the daily and the market structure is a sell, provided that that sell is in alignment with the directional bias, you can take a sell. But if the market structure is not in alignment with the directional bias, you will wait. You will wait till the market structure is in alignment with the directional bias. So if you can view this very closely, like I also said that we have a tool that draws the market structure automatically. So you probably do not need to worry yourself on how to draw the market structure. Where am I going to put my break of structure, my change of character, and all of that? There is a tool that we have designed at Potential Miners International. It's a free tool, but we have our settings which gave us the optimum or optimus, the best market structure layout. You get it now. If you really need that tool, you can make a request in the comment section. Of course, it's free. What we are trying to do at Potential Miners International is to help as many as uh, possible forex traders in the world so that you can be trading profitably and you can be consistent. So we have our market structure to be in alignment with the directional bias. You can see that we have from here, there was a break of structure. This is change of character. We have a break of structure. Everything is saying that we are buying. Are you getting it now? Directional bias is saying we should buy. Let's say, let me just go back. This was last week. This was when we picked the trade. So the directional bias was saying we should buy. The market orientation was saying we are on a similarly markup orientation. We get to the daily, the market structure is saying that we have a bullish market structure. So it means everything is in alignment of a buy option. So what we now want to overview is to see which particular wave are we trading. We can see that we already have an impulsive wave here. This was a corrective wave. On the daily, this was another impulsive wave, and this was another corrective wave. So the next wave was what we traded, this particular wave, and the trade delivered. Let me now walk you through how we pick the trade so that you can really understand it. Now, what we said is, if you have listened to my daily impulse wave, I've done a video on that, on how to trade daily impulse wave. I've emphasized it that after your impulsive wave, you wait for one period of correction. You see that this particular period of correction, you wait for one full day of correction. After that day, then you position, then you go to your 4 hours. What you are expecting is that under your 4 hours, or when you get to the 4 hours chart, you are expecting to see an engulfing move. An engulfing move, the one we traded was this one. The engulfing move that we traded was this particular one. This clearly engulfed. This engulfing was not clear, so we could not trade it. We saw a clear engulfing move, and this is what we mark as our daily money box. If you have watched that video, if you have seen that video on daily impulsive wave, you remember that I always mention daily money box, DMB. So this was our DMB. So we said that you expect the price to trade back into the money box. And once the price trades back into the money box, you go to the 1 hour chart. This is where you want to take your trade now. And in the 1 hour or on the 1 hour chart, you are looking out for, is there any break of structure within the daily money box? If there is, the origin that creates that is your area of emphasis. If you have not seen the video on daily impulsive wave, you might need to go back and watch that video over and over so that you can really understand. But I want to show you how we have used that particular trading framework to pick a trade, and it deliver ratio 1:6 with zero stress. Are you getting it now? So now this is your area of emphasis. You see it now, area of emphasis. Like I used to say, both the daily money box and the area of emphasis, they are area where you have a lot of liquidity that can generate an impulsive wave. So once the price trades back into the area of emphasis, most especially, you want to expect that this price will uh, if you can see an engulfing move, most of the time it is better to see an engulfing move with two consecutive candles. Are you getting it now? An engulfing move with two consecutive candles. You know, something like this. You see, this engulfed, because it's within the area of emphasis, we could have picked the trade here. But for a better stance, we are expecting an engulfing move with two consecutive candles. If you still pick this trade here, it is still delivered. Of course, if it's not going to deliver, of course, it will stop you out. That is not the issue. Once the market trade back into area of emphasis, you can take your trade after an engulfing move. However, it's better to have engulfing move with two or three consecutive candles. So this engulf, you see, if you can see this clearly, this engulf, and of course is one engulfing move now. This is a bullish move that engulf, but is one candle. Assuming this particular candle closes as a bullish candle, it will have been super perfect. Are you seeing it now? Now we waited for this to give us an engulfing move with minimum of two candles. So we saw this and engulf this. So we mark this particular, this will now be this particular low, this low. I want to mark so that you understand how we pick the trade. So this gave us two consecutive engulfing candle. We worked with this after we have seen this. So we now, like I used to say at Potential Miners International, we ensure that we, we refine our trade. The stop loss was around 31 pips, 152.793. That was the stop loss. Then the entry price was 153.107, something like that. 10, 10, 107, 153.107, around, yes, something like this. Then we projected for ratio 1 to 6, ratio 1 to 6. And this trade delivered. This trade delivered. I can show you uh, the mark the mark out of the trade. This was how we marked it out. I think I've deleted it. Okay. But then I sent this particular trade to the systematic de-energizing protocol group. This was the call out trade. This was what we call out. You can see this was the trade that we called out. This was when I called the trade, and these were the parameters. You can see entry price was 153.107, stop loss was 152.793, and take profit was 155.005. You see that now. And between that Friday and today being a Wednesday, the trade delivered. This is how you can trade in the forex market and you relax yourself. The only thing you have to be probably running for is to have enough of capital, because eventually if $100 is what you have and you are able to trade maybe 2% and you make $12, it will still not change your story as a 12. But then suppose you have 1 million US dollars and you can trade with this type of model on 1 million US dollars, and you trade 2% of your 1 million US dollars and you take ratio 1 to 6, which means you have made 12% of $1 million between Friday and today, Wednesday. This is what we are looking at. And anybody listening to me, I want you to begin to project how you can be trading in the forex market with a relaxed mind, with a huge capital. This is where we are going, and that is where it's going to be a game changer for as many that really believe in this trading system. Because Imagine you take a trade and you risk 2% and you projected to make ratio 1 to 6, which means that at the end of the day you are making 12% of 1 million US dollars. You can imagine what it is. You see that now. So this is what is expected of an average forex trader, so that you can harness the power of risk to reward ratio to make profitability in the forex market so easy for yourself. And this, we, over time we have been dishing out several videos, and we will still continue to roll out videos that can really help both struggling traders and intending traders, so that you can really sit down and be observing what we do, and you can probably replicate that and trade and approach the forex market from a professional standpoint. Until I see you in the next video, my name remains Mr. Akimode, the King of Waves. Thanks for listening. God bless you.